Hey guys, welcome to Charlotte Mortgage Insights. My name is Brian Taylor. I'm the owner of Dreamline Realty. I'm joined today with Stephen Knorr, the branch manager of Alcova Mortgage. Our ideas on this channel are to bring you all of the mortgage and finance related materials that are coming out in the news and specifically how they relate to the Charlotte real estate market. Stephen, how are you today?
Oh man, I'm blessed and so thankful to start another year in this amazing industry. I believe this is year 22 for me. So been on the roller coaster ride for a while, but that expertise and that experience is what's going to help us bring knowledge and insight to those who care to listen. But already starting out early on in the year with a lot of headlines, so excited to kind of tackle some of those.
Yeah, and affordability is the theme, I think, for 2026. And that seems to be what the administration right now is focusing on. And this last week, there has just been a plethora of news coming out around that topic. And so that's what I want to dive into today and just bounce some ideas off you. Let's see how it's affecting your thoughts of the mortgage side, my thoughts of what I'm seeing on the real estate side, and just help our viewers maybe put all the pieces together of what we kind of think is going to happen or maybe not happen. But a lot of the things we're going to talk about today are ideas at this point, ideas that could be implemented. Will they work? Will they not? I don't know. But, with that said, one of the biggest things that came out last week, if we look at the administration saying that, hey, the U.S. is going to ban large investors from buying houses. Now, that is on the headline level, a big headline, big piece of news, because there's a lot of first-time home buyers out there that we're struggling to purchase a home back in 2020 in the craziness of the market. And I know that Charlotte is one of the bigger areas across the country with these institutional investors coming in here. So there's a lot of thoughts around this topic. What are you thinking when you see this, when this came out? What was your first thought about that?
Yeah, I think it's got some legs, and the market shifts, right? I joked about it being a roller coaster ride, but everything ebb and flows, and it goes off supply and demand. So if we flip back to when rates were historically low in the twos and threes because there was government money being forced to make that happen, there was no supply. So at that point, when these investors were coming in and buying the properties in droves, it actually hurt the homeowner, right? The American dream, in my opinion, is still to be able to own your own piece of property. And when those institutional investors come in and buy those properties, in theory, they're never going to hit the market again, right? They will be in a portfolio or a hedge fund forever. So that house on Main Street that was a single family home now becomes a rental, for the more than foreseeable future. It's just going to be continued to rent and rent and rent. It's a portfolio home. So now we have some supply, right? There are homes for sale. We're not in a shortage of homes anymore. So I don't know that it's going to have as big of an impact that the headline might make it. But I do think that it's important for just the average American to know that the administration is looking out for them. They want Mr. and Mrs. Homeowner to have first shot at the house. And that wasn't the case before, because those iBuyers and those portfolios and those hedge funds, they were making offers, cash offers that nobody could compete with. Mm-hmm. And you saw it probably on your side, Brian. Yeah. 1 hour on the market and an offer came in so stupid that they couldn't refuse it. And then bam, she sold sight unseen. So I think that's the biggest narrative that I appreciate is, the administration seems to be taking a step to make sure that the homeowner has a chance to play ball. So we don't know the fine print on a lot of this. These are headlines right now that are positive, but what does this actually look like on paper, and will it go through, and things of that nature. But the headline right now is positive for the home buyers who actually want to get in the market and compete and maybe not become a renter or make that move.
Yeah, I would agree. A lot of things will come out of this. I will say that as of recent, even in the last 2 years, we're seeing very few investor contracts come through competing on properties. It wasn't like it was in 2020 at all. So as far as how this will impact Charlotte, we will see. But it's you used to put a house on the market in the 300s and you would have 5 investor cash offers. We're just not seeing that right now. So again, I think time will tell as this plays out how this will land, but definitely swirling in the news. So we will see. But hey, more news came out too, right? I think it was like 2 days after that, we've got this big news, and mortgage rates, dropped to their lowest levels in the last 3 years. And in this article here is completely centered around this whole idea that Fannie Mae and Freddie Mac are going to buy $200 billion of mortgage-backed securities, and mortgage rates are going to go down from what everyone is saying, again, helping the affordability issue. And again, this is not in play yet, but even though it's been announced, we have seen mortgage rates actually fall just because of this news. In fact, if I take you over here to Mortgage News Daily, as of today, we're sitting at a 30-year fixed at 6.01%. Now we're recording this video in the morning. The bond market today is doing really well. I expect this number to be 5.96, 5.97 by the time we're probably done recording this video. But if you look at where we were just, 2 weeks ago, you can see right here, the curve going down. That's a pretty substantial drop in just the last, 7 days. And again, that's probably going to go down a little bit more today. And the funny part about all that is we're talking about these rates coming down quickly just with the news coming out, but no one's bought anything yet, right?
That's right.
So thoughts on that?
Yeah, absolutely. That was, we knew the administration had some kind of aces up their sleeves that they were going to play this year to, make sure that the affordability crisis is, nobody can control it with with one move, but series of events and strategic investments from the government can help. And this was one that came out, kind of without warning, and the market obviously received it very well. Anytime there's a surplus, and again, it all goes back to supply and demand, right? That is what moves all those charts. So when there is a investment of that nature promised, again, there was no dollar spent, but promised to buy that bond, the bond coupon and the actual mortgage rates run on an inverse channel there. So that did allow the yield to drop for mortgage rates, but the market likes that, right? They want to see that. So like you said, Brian, the fine print, we don't know when they're going to buy. We don't know how long they're going to buy. That is really going to show over time what it does to the rates for the entire year. But flip back 2 years, we were in the 8s, right? So we've made monumental strides towards affordability. I don't have a crystal ball, but I can say this with pretty much certain fact that we're never going to see those rates of 2s and 3s, which have golden handcuffs on some people because they got them when they shouldn't, because the government at that point was spending tax dollars to buy the rates down. The key on this is Fannie Mae and Freddie Mac have shown profits, and this is a reinvestment of that money. So it's the same, but it's different, because a lot of people are going to say, well, that bond buying is what screwed the economy and put us in this bad spot. It was a little reckless. It was necessary. It was COVID. It was crazy. Everyone did what they had to do to get the economy going. But this is the same philosophy. It's just different money. So, but again, it was a promise, a pledge to purchase, but we don't have the details. But you can see instantly it brought the rates, and some of the other government options there are in the 5s. So from my standpoint, rates are at I believe it's almost a 3-year low right now, with the idea that they're going to continue to gradually drop. I don't know the exact number, Brian, you might, but home ownership equity is at an all-time high. So what this does allow for certain consumers is maybe they've had that second or third kid and they're stuck in a house, but they couldn't give up that 4% rate to go to 8, but now we're in the 5s and they need to move. And they can make that decision and actually afford that payment. So it's a big positive, because they didn't have to do that, right? And coming right out of the gate, I think that was January 10th or 11th when that news dropped. It was early on. It just kind of sets the tone that this administration is focused on the housing market right now, and it's to get it back under control and to set a standard. And then we got to realize what's the new norm, right? I truly believe a rate in the mid 5s to low 5s with little or no points, that's probably a norm. And then people can kind of reset and get their budgets and focus on affordability and make that decision. Do I need to buy? Do I need to sell? But I can at least know that the market's stabilized, because the roller coaster going from 2 to 7 almost overnight, and then up to 8, and then down to 6, and back and forth, that makes it hard for people to feel good about their decision. So I think that, along with the affordability, is people just like having the confidence that, okay, I can do this. I'm not going to lose out. I'm not going to miss out, but I can also know that I'm comfortable with the market right now.
Yeah, and for you watching the channel, I would love to hear your thoughts. Drop a comment below. Is decreasing interest rates the factor that's going to make you make the decision to purchase a home, or are you waiting for home prices to continue to come down as well? Would love to know kind of what your thoughts out there are. And then another piece of news that came out last week too. I mean, it keeps getting headline after headline. I mean, here you go. The administration wants to cap credit card interest rates at 10% for a full year. Now, goodness, I can't imagine who would not want a 10% interest rate on their credit card and have a year of reprieve. I mean, we all know that the credit card usage, and that I think it's like 1.3 trillion or some crazy number of credit card debt. And to think that, you can be capped at 10% interest, where most credit cards are probably close to 20 or even higher, sounds amazing. Again, we'll see if this goes through, but that's got to play into the fact of there being some reprieve for some people's budgets with this. Again, just news, nothing has been set in stone, although the administration does mention in that article that they want this to go in effect on January 20th. I don't know how they pull that off so fast. But I mean, what do you think about that?
Yeah, we've actually had people calling, our customers calling, saying, hey, does this help me? And yes, in theory, but until the details are released, there's mortgage guidelines, there's underwriting, there's investors, there's things that have to happen. But like I just said, with home equity being at an all-time high, it seems like every month, especially following December, we keep breaking the record of credit card debt. And we see it, right? We see it due to the inflation that everyone's experienced. A lot of people didn't have any choice but to live off credit cards. So to get that monkey off their back, and or just get a breather on it. But, sometimes people will call us and kind of complain about an interest rate, when they were in the 7s or even in the 6s, but your credit cards are probably pushing 25 to 30, maybe even above, depending on your score. So that personal budget is what we focus on the most, which is affordability, right? Your take home, your gross, your net, your spend. So it'll allow people to readjust that, and it might allow them, if rates come down, they get a reprieve on credit card payments, they're going to find some money. Now, they're not talking about saying you don't have to pay your credit cards or wiping out the balances. They're just giving you a break on the interest. But that will be something that, without a doubt, in the mortgage world, can create affordability on a month-to-month basis, and possibly take somebody that was going to be stuck renting, actually, pulling the trigger to become a homeowner because they see that light.
Yeah, absolutely. So again, we'll see how all this shakes out. As with anything that we're talking about around only these headlines, there's probably a lot of pros, there's probably a lot of cons. Some people are speculating that these whole ideas are great in the short term, but they may have long-term consequences around inflation, this and that and the other. We just don't know. We're here to bring you the headlines and talk about them and see where this all goes. So guys, if you're getting any value out of this content, please do us a favor. Like this video, subscribe, because we're going to be bringing you more videos like this, just talking about topics, having some banter around them, the pros and the cons, and all of that stuff. Speaking of more news coming out, the administration has already said, wait until our meeting in Davos. We've got more breaking news that's going to blow you away around affordability. So who knows what comes out of that? One thing that
go ahead, Brian.
I'll say one thing that I have heard as a strategy is this whole idea that, hey, why don't we create some kind of a way for somebody who's got a 3% interest rate and make that interest rate portable. If a seller wants to sell their house and they have a 3% rate, hey, sell your home and take that rate with you to your next house. That's one thing I've heard. Who knows? How would that even be pulled off? I don't know.
We've heard it. If they can do it, great. There's a lot of behind the scenes. And in May, we've got a new Fed chair coming, right? So there's a lot of activity. And from where I stand, usually the end of December, early January is kind of a flat line, right? Enjoy your holidays, get a breather, get ready. But right now, the administration is showing that they're not wasting any time. They're getting to work. Housing market and rates and affordability, right off the bat are going to be, we've seen it already. So what I'm excited about is that, it seemed to have been, it was a talking point, but now it's an emphasis. And right off the bat, we're already seeing, decisions being made. So for those that are interested and maybe thinking this might be the year, it probably is. So we got to wait and see what all the fine print, comes out to be. But I'm just excited that there's energy, positive energy, because it's not always been that case for the past couple of years for the housing market. So, I believe this could be a good year for that.
Yeah, absolutely. Hey, if you guys got any mortgage related questions specifically for Steven, all of his contact information is in the description below. Scan that QR code right there, hop on his calendar. And if you've got real estate questions or want to bounce some ideas off of me, that's how you can find me as well. My call with Brian will take you right to my calendar. Book some time on my calendar. Talk to me about what's on your mind. Would love to have that conversation with you guys. We are just here to help you on the real estate and mortgage front, and hopefully we can be a great resource for you. So please subscribe to the channel. We got a lot of cool stuff coming your way. And thanks for watching, and we'll catch you in the next one.